If there was any doubt before, Federal Reserve Chair Jerome Powell has pretty much cemented the likelihood that there won't be interest rate reductions anytime soon. Now, Wall Street is wondering if the central bank will cut at all this year. That's because Powell on Tuesday said there's been a lack of further progress on lowering inflation back to the Fed's 2% target, meaning it's likely to take longer than expected to get enough confidence to start easing back on policy. They've got the economy right where they want it. They now are just focused on inflation numbers. The question is, what's the bar here? Said Mark Zandi, chief economist at Moody's Analytics. My sense is they need probably 3 consecutive months of inflation numbers that are consistent with that 2% target. If that's the bar, the earliest they can get there is September. I just don't see rate cuts before that. With most readings putting inflation around 3% and not moving appreciably for several months, the Fed finds itself in a tough slog on the last mile toward its goal. Market pricing for rate cuts has been highly volatile in recent weeks as Wall Street has chased fluctuating Fed rhetoric. As of Wednesday afternoon, traders were pricing in about a 71% probability that the central bank indeed most likely will wait until September, with the implied chance of a July cut at 44%, according to the CME Group's FedWatch gauge. As for a second rate cut, there was a tilt toward one in December, but that remains an open question. Right now, my base case is one in September and one in December, but I could easily see one rate cut in November, said Zandi, who thinks the presidential election could factor into the equation for Fed officials who insist they are not swayed by politics. The uncertainty has spread through the street. The market-implied odds for no cuts this year stood around 11% on Wednesday, but the possibility can't be ignored at this point. For instance, Bank of America economists said there is a real risk that the Fed won't cut until March 2025, at the earliest, though for now they're still going with a December forecast for the one and only cut this year. Markets at the onset of 2024 had been pricing in at least 6/4 percentage point reductions. We think policymakers will not feel comfortable starting the cutting cycle in June or even September, BofA economist Stephen Juneau said in a client note. In short, this is the reality of a data-dependent Fed. With the inflation data exceeding expectations to start the year, it comes as little surprise that the Fed would push back on any urgency to cut, especially given the strong activity data. To be sure, there's still hope that the inflation data turns lower in the next few months and gives the central bank room to ease. Citigroup, for example, still expects the Fed to begin easing in June or July and to cut rates several times this year.